In 1988, the ground beneath the Imperial Palace in Tokyo was estimated to be worth more than the entire state of California. Think about that for a second. 1 square mile in Japan was theoretically worth more than Silicon Valley, Hollywood, and the Golden Gate Bridge combined. Japan wasn't just winning. They were buying the world. They owned Rockefeller Center in New York. They owned Pebble Beach. American factories were closing, while Sony and Toyota were conquering the globe. Experts predicted that by the year 2010, Japan would be the undisputed superpower of the 21st century. But then, almost overnight, it vanished. In 1990, the bubble burst. The economy flatlined. Wages froze. And for the next 30 years, Japan became a ghost of its former self. Trapped in what economists call the lost decades. History books will tell you this was a market correction. They will tell you it was a result of irrational exuberance. But they are lying to you. What happened to Japan wasn't an accident. It wasn't bad luck. It was a calculated, cold-blooded execution signed on a piece of paper in a New York hotel room. It is perhaps the single greatest economic assassination in human history. And the weapon used. It wasn't a bomb. It was a handshake. To understand how an entire nation's future was stolen, we first have to understand the ally trap. There is an old saying in geopolitics, it's often attributed to Henry Kissinger. It may be dangerous to be America's enemy, but to be America's friend is fatal. By the mid-1980s, the United States was in trouble. The post-war boom was over. The deficit was exploding. U.S. manufacturing was dying in the Rust Belt. And the dollar was simply too strong, making American goods too expensive to sell abroad. Meanwhile, Japan was running a massive trade surplus. They were efficient, they were rich, and they were the creditors to the world. Washington needed a way out. It couldn't fight Japan. Militarily, Japan was a vital ally against the Soviets. So, they decided to fight them financially. On September 22, 1985, the finance ministers of the G5 nations met at the Plaza Hotel in New York. The public goal: stabilize the global economy. The real goal is to devalue the US dollar and forcibly strengthen the Japanese yen. It was called the Plaza Accord. It sounded like a fair trade deal. In reality, it was a suicide pact. The US convinced Japan to put a gun to its own economy and pull the trigger. And today, we are going to expose exactly how this mechanism works, because once you see the pattern, you will realize it is happening again right now. Let's go back to the crime scene to see how the trap was set. Act 1 is the rise. After World War II, Japan was ashes. But within 30 years, they pulled off the Japanese miracle. They built an export machine that the world had never seen. By the early 1980s, American car manufacturers in Detroit were panic-stricken. Japanese cars were better, cheaper, and more reliable. The trade imbalance was massive. American politicians were smashing Toshiba radios on the steps of the Capitol building. The media was screaming about a Pearl Harbor without bullets. The U.S. demanded Japan share the burden of global leadership. This leads to Act 2. The mistake. Under immense pressure from the Reagan administration, Japan agreed to the Plaza Accord. They agreed to intervene in currency markets to let the yen appreciate. They thought they were being good allies. They thought this would ease trade tensions and allow them to keep their seat at the table. The effect was instantaneous. The yen didn't just rise, it skyrocketed. It doubled in value against the dollar in just 2 years. Suddenly, Japanese products became twice as expensive for Americans to buy. Japan's export engine, the heart of their economies, seized up. To stop the economy from crashing immediately, the Bank of Japan panicked. Since they couldn't sell goods abroad, they needed to stimulate spending at home. So, they slashed interest rates to record lows. They flooded the market with cheap cash. This created the bubble economy. With cheap money flooding the system, companies started speculating. Real estate prices went vertical. Stocks defied gravity. The theoretical land value of Tokyo became worth more than the entire United States. It was a hallucination of wealth, fueled by the very poison the U.S. had forced them to swallow. And finally, Act 3. The collapse. The Bank of Japan realized things were out of control and hiked rates in 1989 to cool things down. But it was too late. The bubble didn't just leak, it exploded. The stock market fell 60%. Land prices fell 70%. Companies that were once global titans were now zombies, kept alive only by bank bailouts. Japan entered the lost decades. No growth, no inflation. Just a slow, painful stagnation while their population aged and their dominance faded into memory. They made the mistake of trusting that the empire wanted fair play. The empire only wanted survival. Narrator: when we step back and analyze the Plaza Accord alongside other economic collapses, a terrifying pattern emerges. This isn't just about Japan. This is the five-stage hegemonic defense mechanism. Stage 1 is the competence trap. A vassal or ally nation becomes too efficient. They work harder, save more, and produce better goods than the empire. They run a massive trade surplus, accumulating the empire's currency. Stage 2 is villainization. The empire blames its own economic failures on the ally. They are cheating. They are manipulating. They are stealing our jobs. Politics turns hostile. Tariffs and sanctions are threatened. Stage 3 is the currency weapon. This is the trap. The empire forces the ally to appreciate their currency to balance trade. This destroys the ally's competitive price advantage overnight. Stage 4 is the internal bubble. To compensate for the loss of exports, the ally prints money to boost domestic consumption. This creates a fake asset bubble. The rot moves from the factory floor to the stock market. Stage 5 is the harvest. The bubble bursts. The Elias assets become cheap. Who comes in to buy them? The investors from the empire. The competitor is neutralized, and the empire remains on top. Japan completed all 5 stages perfectly. And if you look at the global chessboard today, the U.S. is setting up the pieces for another round. Fast forward to today. Who fits the profile of Japan in the 1980s? A massive manufacturing power. Check. A massive trade surplus with the U.S. Check. A rising military and economic threat. Check. It's China. The parallels are so exact, it's scary. Just like Japan, China holds trillions in U.S. debt. Just like Japan, China built its economy on exports. And just like the 1980s, Washington is screaming about unfair trade practices, overcapacity, and currency manipulation. The trade war that started in 2018 wasn't about soybeans or steel. It was an attempt to force a Plaza Accord to point zero. The U.S. wants China to float the yuan. Let it appreciate and kill their export dominance. But here is the twist. China studied history. Beijing looked at Tokyo's economic corpse and said, "We will not drink the poison." China has refused to let the yuan appreciate significantly. They have refused to open their capital account fully to Western banks. They saw that relying on the U.S. consumer is a trap, so they are desperately trying to pivot to the global south and internal consumption without blowing a Plaza-style bubble, though their real estate market is already shaking dangerously. But the pattern isn't just about China. Look at Europe. When the euro threatened the dollar in the 2000s, we saw the 2008 crisis ripple across the Atlantic, destroying the euro's momentum. Now, with the energy crisis and the war in Ukraine, European industry is deindustrializing. Companies like Volkswagen and BASF are moving production where? To the United States. The U.S. economy is currently absorbing the life force of its allies to keep its own heart beating. The high interest rates and the strong dollar we see today are crushing every other currency on earth, the yen, the euro, the pound. It is a passive-aggressive Plaza Accord happening in real time. So, what happens next? History tells us that this game cannot be played forever. The Plaza Accord trick works because the world trusts the U.S. system. They trust the dollar. They trust the alliance. But by weaponizing the financial system so aggressively, by assassinating the economies of friends and foes alike, the U.S. is forcing the world to find an alternative. Japan took the hit silently because they relied on U.S. military protection. China is different. The BRICS nations are different. They are building their own lifeboats. If the U.S. continues to push for a harvest, we won't get a Japanese-style stagnation. We will get a global fracture. The world will split into two distinct economic blocks. For the average citizen, for you this means the era of cheap goods is over. The era of global stability is over. We are moving from a world of win-win trade to a world of zero-sum survival. The U.S. will not give up its throne without burning down the palace. When empires fall, or when they fight to stay alive, it is never slow. It is sudden, it is brutal, and it is final. The Plaza Accord taught us a brutal lesson about the nature of power. Economics is not just numbers on a screen. It is warfare by other means. Japan built the greatest economy the world had ever seen, and it was dismantled by a signature on a piece of paper. As we watch the headlines today, remember, when the empire smiles and offers a handshake, check your wallet. And then, check your survival kit. If you want to understand the hidden wars that determine the value of money in your pocket, make sure you subscribe and ring the bell. We are rewinding the economy to show you the future.